What is going on, everybody? Welcome back to Trading Learning 101. I have another playbook play for you guys. This play is going to be called the rubber band play, the mid-candle breakout play. It comes in all shapes and sizes. Let's jump into it and break down this playbook trade, the rubber band play. You'll hear other traders call it different plays. I always like to name my own plays in my own special way. The way I'm going to explain this to you guys, you'll understand why I call it the rubber band play. And like I said, it comes in all different shapes and sizes. So we all know a rubber band and how a rubber band works. When you pull back on a rubber band, you're just building up tension and tension and tension. And then when you release the rubber band, that's when you get that very fast snapping motion of all that energy that you built up right here by pulling back on it. This is why I like calling this play the rubber band play. And like I said, it comes in many shapes and sizes. When you have a big first green day, this could be on the daily chart, the 65-minute chart, 30-minute chart, 15-minute chart. The bigger the time frame, the more explosive the move is going to be. So we're looking at ABIO here on the 30-minute chart. You get a big move to the upside right here from $5.50 all the way up to $9. And then you get this red pullback right here to about the midway point of this first green candle right here. And then it snaps right back up to the upside. This is a really good example with this candle right there. And like I said, going back to the rubber band play comes in many shapes and sizes. It could take a day, 2 days, a week, a few weeks, a month for the rubber band play to go into effect. We're looking at a 30-minute chart. We got this huge up move right here. We get this pullback down right here, and each candle is 30 minutes. And you can see when it pulled all the way back right here, then it starts to U-shape around and it snaps right back up to the upside. A pullback right here snaps to the upside. Very long built up pullback right here, snaps to the upside right there. Big spike right there, pulls back, rips back up. Does it again right here as well. You'll hear people call these U-shaped patterns, cup and handle patterns. There's all types of different plays you can look out for. Always try to look for the stock to retrace after a big move like this when it comes back down. Always look for it to at least pull back 50% of its first big move right here. And as you can see right here, we got this big move up. It pulled back at around 50% and ripped right back up. We'll throw Fibonacci's retracements. That's why you'll see traders throw Fibonacci's on their charts. You'll see Fibonacci's work not all the time, but a lot of times. When a stock spikes, traders will throw Fibonacci's from the swing low to the swing high. Look how far back the stock pulls back, and they try to look for the stock to pull back at around the 50% or the 61.8% level for a nice bounce and rip to the upside. And you can see right here on this first spike, when it pulled back, look at right where it bounced at. Right at that 50% level. So the stock pulled back 50% of its first big move right here, and then ripped from $7 all the way up to a high of $10. Noticing little moves like this could be a big payday for you. And we're looking at this on a 30-minute time frame. This setup took 1 hour for a $3 move. Now let's look at the daily here on ABIO. And like I said, the rubber band play and the U-shape play, it comes in all shapes and sizes. We got our first big green day right here rips all the way up. The next day, it gets a gap up all the way up here, pulls back all the way down, and it even pulled back for its second day. And look at right at the level where it bounced at. On the third day with this rubber band play, tension built up and pulled all the way back, filled the gap right here, and bounced right at the top of this first day right here at the price level it closed at. And we got a nice 4-day bounce from $10 all the way up to $19 right here. A good example of the rubber band play coming in all different shapes and sizes. And then we got another one right here that was drawn out for days. When we had this big bounce right here, this stock pulled back for 1, 2, 3, 4, 5, 6. On the 7th day, it tried getting a little bounce right here, but didn't get any momentum. So it continued for the 8th day, 9, 10, 11, 12, 13, 14, 15, 16. On the 17th day, we finally got our big rubber band bounce. Tension built up all the way down. And remember what I said, the bigger the time frame, the bigger the rip. And the lower the float is, that's when you can see a stock really, really rip. And that's what happened here on ABIO. From 550, this ripped all the way up to $9. A nice $4 rip to the upside. And this is why it's important to add stocks to your watch list and keep tabs on them days, weeks after its first big day. Because you never know what could happen in the future. And this is just all pure technical analysis. There is no fundamental analysis with this. Here's another example right here on ABIO. Again, they come in all different shapes and sizes. You have your first big green day right here. The second day, it gaps up really, really huge. Gets a quick spike with that wick. Sells all the way down. And then even on the third day, sells all the way down. And then on the fourth day, it finally stabilized right there and gets a nice rip from $12 all the way up to $16. And again, we could throw Fibonacci retracement on this just on the first day right here. I want this to come back down to the first day. And you can see when this went all the way up and beyond and it's just rejected it and came all the way back down and people took their profits, just putting Fibonacci retracements on the first green day right here, look at where this bounced right at. If I draw a line all the way over, right at that 61.8 level. That's why it's key with rubber band plays, or if you call it mid-candle breakout plays. I'm sure you've guys heard of it at one point in time, especially if you're a day trader or an investor in the market, a mid-candle breakout pattern. This is what they're talking about. For the stock to rip on its first day, and then for it to pull back to around 50% or at least 61.8%, and then get a nice bounce off that level. And this is why, again, people use Fibonacci retracements to try to measure the first day's move. That way when the stock pulls back, it gets a nice bounce off these levels because other traders are doing the exact same thing. Some people just eyeball it, be like, yeah, this is about 50% right here of where the candle is. So in this area, I'm going to look for a bounce. Or people will just slap on Fibonacci retracements. There is no fancy way to use Fibonacci retracements. You could use Fibonacci retracements really any way you want. Use it based around your strategy. You could watch videos all day about people saying this is the correct way to use Fibonacci. This is the correct way. There's so many videos out there. You have people arguing it's from swing highs to swing lows, from swing lows to swing highs. You know, just really keep it simple. All I really do, I use it in different ways. You could use it either from the low to the high of a candle, or from a whole move from the low to the high of a candle. And when the stock pulls back, you watch those levels to see where it bounces off of. This video isn't revolved around Fibonacci's. This is revolved around the rubber band play or the U-shaped breakout play. And we just covered this on one stock, ABIO. So I really hope you guys got my explanation of this playbook play. And just to show you, I drew a circle right here. This is only just one play in a playbook. And look at what this stock did overall. Moving from $5.50 all the way up to $20.50. There's multiple strategies out there, multiple plays. It's all about finding what plays work for you and what plays you like to look out for, and building your playbook up. So I got another example here of the mid-candle breakout pattern. This is ticker symbol OSTK. Looking at it on the daily chart, what I want to focus on the daily chart here is this area right here. Every candle is one day. You can see right here on June 21st of 2019, the stock had a range from $9.82 all the way to just over $12. This blue line right here is the 50-day moving average. You can see the stock closed right below that 50-day moving average. Stock gapped up a little bit above the 50-day and then pulled back for the next 2 days. And look at the area where the stock finally pulled back to, around the 50% retracement level of this first green day right here. Stock takes 2 days, pulls back about 50% mid-candle of the first day, and off it goes. From $10.75, this thing runs all the way up to almost $14. And then looking at it on the 10-minute chart, this area right here, I already have it planned out. Right here, June 21st, stock runs from $9.80 all the way up to just over $12. And then for the next 2 days, it pulls back right here. And you can see as well, it's setting up a pattern as well, as it's making lower highs. And it's also making lower lows, forming a descending wedge, getting tighter and tighter and tighter and tighter until it gets to the very end of the pattern. You can see the volume is also dying down, and then all this volume starts picking up. And then from this $11 area, runs all the way up to $14. Got exhausted right there, very, very toppy. And then a big gap down back to the area of way over here, this big resistance area where it topped out, holding as support, and then runs all the way back up, making a new high, filling in this gap right here, and topping out at around $14.50. Just wanted to show you guys another example of the mid-candle breakout pattern. It comes in all different shapes and sizes, so you gotta keep an eye out for it. And this is why it's important to look at charts on multiple time frames. Always just sit and look at the charts and try to keep your charts as clean as possible. Like I said, the more clutter you have on your charts, the more it's going to take to see what the chart is trying to tell you. Like for instance, I'm looking at the daily chart right here. You can see all these lines that I have. They're just moving averages, and just with these moving averages on my daily, it's already cluttering up my chart to where I can't clearly see the candlesticks. Next up, I got another example of CEI. This is the daily chart, and this is another example that the mid-candle breakout pattern and the rubber band play comes in all different shapes and sizes. Here on CEI, we have the first big green day right here, running from $2.50 all the way up to $9.50. For 2 days, this stock pulled back all the way down to around this $3 level, and on the third day, this big candle right here with the wick, big upper wick, when the stock runs from $3 up to $5.50. This stock pulled back around 80-85% and then gets a pop. Here we're looking at CEI on the intraday chart, 1 minute. This is the first day right here when it ran from $2 pretty much all the way up to $9.50. I threw Fibonacci retracements on it. The second day, it just kept pulling back and selling off. And then on the third day here, the 76.4 Fibonacci level, it fell below that. So it's showing you the stock pulled back at around 80%. And then right at this 325 level, right here, runs all the way up to $4. Stock comes back down to that 325 level, went sideways. The next day, on the fourth day, this stock runs from 325, gets an explosion there, all the way up to $5.50. Not perfect for a mid-candle breakout, but I want to show you guys different examples on different tickers. This pattern comes in all different shapes and sizes and on multiple time frames as well. They're not going to be perfect. Every stock, you got to look at them like people. They all have their own personalities and they're all going to move their own way. I'm a big fan of saving a lot of charts. That way, if the same stock pops up again in the future, I can go back and look at history on how the stock liked to move. I hope you guys enjoyed this video. Hit that thumbs up if you enjoyed it. And until next time, guys, have that patience, have that discipline, and study, study, study. All right, later, everyone.